Goldman Sachs illuminates S&P 500 en route to a 5% return by late 2024. In a financial symphony orchestrated by Goldman Sachs, NYSE, GS, equity strategists have unfurled their prophetic tapestry for the U.S. stock market in 2024. The crescendo of their forecast, an anticipatory 5% crescendo for the S&P 500 index, painting the financial skyline with a 6% total return, dividends included. The overture to this financial saga lies in the assumption of the U.S. economy continuing its measured dance. Skillfully sidestepping the specter of recession, Goldman crafts a narrative where earnings swell by 5%, and the market's valuation pirouettes at approximately 18 times, harmonizing with the present price-to-earnings ratio. However, amidst this financial sonnet, the strategists humbly admit, our forecasts, a tad beneath the usual 8% return during presidential election years. Yet, even as the stage is set for this potential market waltz, Goldman introduces a subplot. Macroscopic forecasts paint a favorable backdrop for equities, but caution flags flutter, dampening the exuberance. Economists' predictions of GDP growth surpassing the 2.1% consensus for 2024 are already inscribed in the ledger of stock prices. The narrative unfolds with stabilized margins and stock multiples, seemingly content with their current macroeconomic landscape, remain indifferent to the allure of increase. In 2024, the strategists, donned in financial maestro attire, foresee an annual return shy of the S&P 500 index average. Yet, beneath the surface, they point to an opulent tapestry of investment opportunities. They spotlight three crescendos: 1. Holding quality stocks amid the persistent end-of-cycle anxiety. 2. Holding growth stocks, pirouetting on high ROIC, propelled by stable growth and interest rates. 3. Holding cyclical values losing momentum, where the specter of recession is but a fleeting shadow. As the financial symphony nears its finale, the strategists, with a bow to the Magnificent Seven, forecast a continued virtuoso performance in 2024. Yet, a nuanced warning echoes through the auditorium. While these 7 stocks command an aria of faster expected sales growth, higher margins, a larger reinvestment ratio, and stronger balance sheets than their 493 counterparts, the risk-reward profile may not be a concerto of allure, given the soaring expectations. New York, the financial stage is ablaze with optimism, a celestial performance sparked by signs that the U.S. Federal Reserve's endeavors to quell inflation may yield triumphant notes. Simultaneously, political acrobatics have avoided the ominous shadow of a government shutdown. Investors, donned in anticipation, now flirt with the idea of an interest rate cut, a balletic departure from the previous choreography of rate hikes. This metamorphosis in sentiment unfolds its wings with Tuesday's unveiling of a cooler-than-expected consumer price index, CPI, initiating a grand allegro in U.S. stocks and bonds. S&P 500 futures contracts, unfurling like a resplendent banner, suggest additional crescendos, hinting at a potential inflection point in the relentless battle against inflation. An orchestration of sustained ease and cost pressures, this opulent overture extends its melodic tendrils beyond the boundaries of the United States. Globally, financial markets, akin to a global symphony, echo sighs of relief. The United Kingdom, caught in the lyrical embrace, witnesses its inflation scale the lowest notes in 2 years, while China, in an economic rhapsody, experiences a renaissance in consumer spending and industrial production. On the political stage, the potential for a crisis is artfully sidestepped as the U.S. House of Representatives orchestrates a harmonious agreement, staving off the ominous shadows of a government shutdown. This development, akin to a well-timed crescendo, elevates the overall market confidence, with political stability performing the role of a maestro in the grand economic opera. These financial developments, akin to movements in a grand symphony, unfold with myriad implications for the global economy, particularly the United States. That grand conductor orchestrating the global crescendo, the continued softening of inflation, akin to a soothing refrain, holds the promise of respite for consumers and businesses alike. Furthermore, President Biden's economic sonnet may find a harmonious echo in rising approval ratings, as adept inflation management often serves as a poignant reflection of sagacious leadership. The investor audience, with rapt attention, awaits the next movements in the financial sonata. Will these early hints of alleviating inflationary pressures crescendo into a prolonged refrain, shaping the destiny of monetary policies and influencing the harmonics of global economic growth? The anticipation, akin to the pause before a grand finale, hangs in the financial air, awaiting the next symphonic revelation.